Well, good day there, subscribers, and welcome in. I am happy to be back in Vegas. Just got back from LA over the weekend, and today was a really interesting day in the stock market because this is a big day. Whenever you have a week that was craziness like it was last week, on Monday's always really big, guys. So I want to kind of look at what happened in the market and some stocks that went up and down and whatnot. I want to talk about Goldman Sachs in two different things. One, Goldman Sachs came out and had some very negative commentary around Apple. I want to kind of hear about their bearish point and kind of talk about that. Also, Goldman said a lot of people should be going out there and buying stocks, that the sell-off is just about done, guys. So I kind of want to dissect both those and kind of give my opinion on that. I hope you guys enjoy this. As always, hit a thumbs up if you do, and let's get into this. So as far as the market, it was not a crazy day in the market, okay? The NASDAQ moved down a little less than 1%. The S&P 500 moved down a little over 0.5%. And like I said, it's always a really big day. When you come off of a week of craziness like we had last week and you come into Monday, you never know what to expect. Are we going to have a day when the market just rallies like crazy? Are we going to have a day when stocks continue the crash? Or is it going to be kind of like a little bit of a lame day? And that's kind of how I would describe what happened in the market today. As far as a lot of stocks that went down huge, that were big names, there were not a lot. However, on the upside, the weed stocks are back in favor, okay? NBEV up big today. Kronos, Canopy Growth up big today. Tilray up big today. All of them up double-digit plus percent. They kind of cooled off the past month or so, and today they got back in favor. Those are unbelievable trading stocks out there because if you're trading those right, they're so volatile as far as their upside, downside. If you're shorting them right and buying them right, man, you can make a lot of money. Not something I do, not something I would suggest anybody else out there do. I'm just saying, if you know how to play it right, man, those are the type of stocks you can make a lot of money in because they are so volatile. It's unbelievable, guys. So now let's get into the heart of this video, which is around Apple, and then we'll get into what Goldman is saying basically about the stock market in general right now, right? Apple earnings may disappoint investors because of a marked deterioration in Chinese demand for iPhones, Goldman Sachs says. There are multiple signs of rapidly slowing consumer demand in China, which we believe could have easily affected Apple's demand there this fall, Goldman analyst said in a note to investors on Sunday night. Though Hall admitted the smartphone market in China has showed some signs of improvement in the second quarter, his forecast for third quarter unit sales volume show a decline of 15% year over year. That's a big decline there. While the analyst expects Apple's larger iPhone, the XR, which isn't even available yet, that shouldn't be available till the very end of this month and pushing into November, and the iPhone XS Max to counter some of that softening demand. The overall decline in phone demand could be costly to CEO Tim Cook's bottom line, they're saying. Hall's current projections for Apple come in at around $11.78 for the current fiscal year and $13.77 for fiscal 2019, all right? He says Apple's bigger smartphones could at least partially offset the negative macro indicators, though we doubt it will completely solve the problem in the Chinese consumer demand out there, all right? And lastly, the analyst also said much of Apple's upside potential in our thinking was centered around Chinese demand for larger screen sizes, the analyst wrote. Should weak consumer demand persist, the impact on the higher end of the market, which would be Apple's potential to beat and raise fiscal Q4 2018 is likely reduced, he is saying here, okay? The analyst said his current December quarter iPhone estimate is around 80 million units, and that includes 13 million from China, or 16% of the total volume there, right? That's down from 19%. If they actually did that number, that would be down from 19% the previous year, all right? So, needless to say, this gentleman is pretty, I would say, pretty bearish on the overall smartphone market in China. I don't think he's necessarily saying that Apple's just a weak company in China. I think he's mainly kind of saying, you know, just the whole overall market in China right now is weak, okay? And we've heard a lot of rumors about, you know, Chinese economy is getting worse and worse. The tariffs are going to start to hit the Chinese consumers out there. Maybe, you know, the people don't want to spend $800 or $1,000 on a smartphone when they're not feeling too good about themselves. Remember, the GDP per capita in China is dramatically less than somewhere like the United States. And plus, with those tariffs tariffs on, that's going to raise iPhone prices even more. So an iPhone might end up costing, $1,200, $1,400, $1,800 if you want some of the higher end models of the iPhone. When the average Chinese person might be making, let's say, 10 grand a year or something like that, that's a very big part of their budget, right? So you're really, kind of going after a very small amount of the market that Apple is over there when you have these type of price points. I think the biggest success in China for Apple as far as this upcoming year, I think will honestly be the iPhone XR. I think that has the biggest potential out there because that's going to be their lower price phone, which is going to come in around $250 cheaper than the iPhone XS, and the iPhone XS Max is going to come in around $350 cheaper. So as far as that goes, if you're bullish on Apple for the long term, I would say most of that's still intact, okay? Regardless if Apple's up 5% in the Chinese market, down 5%, up 10%, down 10% in the Chinese market, it doesn't make a massive material difference in what Apple's overall business is doing for the coming years. But it is something to think about there, especially if you're trying to play that for a short-term trade of any kind, all right? Now let's get into what Goldman Sachs has to say about the overall stock market in general. So they say, while investors wait for the squeal of last week's market sell-off, Goldman Sachs strategists think the worst has already passed. Goldman's U.S. chief equity strategist says we see limited further downside, okay? We see limited further downside. He added that the kind of pullback the market saw last week was common. I agree with that. That just happens from time to time, at least 3-4 times a year. Stuff like that usually happens. Despite the recent sell-off, he says, equity fundamentals are strong and we remain constructive on the path of the S&P 500. Goldman's year-end price target for the S&P 500 is 2,850, which looked pessimistic at one time, but now that's only about 3% upside from where the market's closed on Friday. That Goldman call runs counter to what some Wall Street firms have been talking about, that there's going to be more dramatic volatility, that stocks could move down even bigger, things like that. But Kostin said such declines are normal and shouldn't have long-lasting effects. The S&P 500 historically has seen 5% drawdowns, including every 71 trading days, and it has had 69 since the last one, okay? Investors, though, have gotten used to low volatilities that has persisted the last 2 years in the bull market, all right? So this is very interesting. He says, he's basically coming out here and saying we see pretty much a bottom here. Things will start to move back, upward as we get into November, December. It's going to be, a good year end. He thinks, we pretty much reached a bottom. Here's the thing, it's a lot of it's going to depend on what these earnings, earnings season's kicking off right now, and it's about to go in a massive week. The week of Halloween, the week before Halloween, the week of Halloween, and the week after Halloween, that is going to be earnings bonanza. We're going to have a ridiculous amount of earnings out there, guys. Like, it's going to be crazy. Pretty much any company that's a big company that matters out there and people look to gauge the overall markets and the economy, all those companies are going to be reporting pretty much in that 3-week span. So we're about to go into a massive earnings season. And depending on how those companies report, depending on what their guidance is, and depending on what their outlooks for 2019 is, that's what's really going to dictate kind of where the market goes for the remainder of the year. If we see a lot of weak guidance, if we see a lot of commentary that is very negative, that is very, what I would call scared commentary, that, oh boy, we're a little scared going into 2019, all these tariffs. If we hear a lot of that out there from CEOs of these big companies, that is going to freak the market out in a big way. And this could be a situation where we have a massive amount of volatility going into the end of the year. However, if most companies have, very solid earnings, have good guidance, and have good outlooks, we should see the market start to move back up. But a lot is going to depend on where those guidance comes out at. What's the outlook going into 2019? A lot of companies are going to be talking about that in this particular earnings season now that we're coming up on the end of 2018. Analysts are going to be drilling them with a lot of questions. That is what will really dictate, kind of the, what type of 2018 we're going to have here at the end and what happens going into 2019, guys. So it's going to be a big next few weeks in the stock market, guys. A big next few weeks because, like I said, we're getting into the heart of earnings season. And oh, I love it. I love it. You guys got to love it too. A lot of money's going to be made. A lot of money's going to be lost. But needless to say, there's going to be a lot of action out there, guys. And a lot of opportunities for people to buy shares that may not have been able to buy them in the past. And a lot of people that may, make a lot of money in the end. So hope you guys enjoy this. As always, let me know what your opinion is down there in that comment section on Apple specifically. specifically, and on, you think the stocks are going to weaken as, we go into the rest of 2018? Do you think they'll strengthen? Do you think we'll stay around here? I would love to hear from you guys in that comment section as always. Make sure you follow me on Instagram if you love to keep up with stock market news. I post a lot in my stock market, my Instagram stories. Thank you for watching. Have a great day.